Friday's market closes. Well, we were higher in all the livestock, but a lower day in the grains here with analysis, Chip Nellinger, Blue Reef Agri-Marketing. So we started off with corn and soybeans to the plus side on Friday. It looked like we were trying to put some weather premium in, but boy, when you got a crude oil market down and wheat pulling down corn, it didn't stay up very long, did it?
It didn't, but in the big picture, corn really held its own given the weakness in the wheat market and the weakness in the crude oil market. You can tell that corn is very concerned about this extended weather forecast that we have that right now has a lot of heat in it and very limited scattered rainfall for the next couple of weeks.
Right, and so if we come in here on Monday night, because we have a 3-day holiday now, and we have extended forecasts, which still look pretty hot and dry, do you think we're going to be able to take out overhead resistance we hit on Friday, $8 on old crop, $7.50 new?
Yeah, I think if we're looking at a 2-week forecast, and the market, surprisingly enough, is starting to even look a little further out, like they're getting comfortable with this 3-week forecast now, which is a little bit suspect in my mind. But that extended forecast is going to take you out kind of roughly to the July 4th, 5th time frame. And if there's no perceived change in that to cooler and wetter, I do think you're going to quickly add some premium and get well above this past week's highs and then some. In the same breath, if we come in here and there's some major shift and they take the heat out, the ridge moves and allows for some better rainfall, more general rainfall across Corn Belt, probably 40, 50 cents at a minimum is coming out of the corn market with some added premium that was, kind of put in the last 10 days.
Yeah. Well, as we said, corn got dragged down by the wheat to some degree. So the wheat market kind of imploded. So was that harvest pressure, the dollar screaming higher, or what was it?
I think it's the wheat market being the wheat market. You can maybe make the excuse you've got a long weekend and a long harvest weekend here. There might be some truth to that. It's hard for the wheat market to rally in the face of a harvest weekend. I think it's just wheat being wheat. We really got up to some resistance levels yesterday on an intraday chart. You tried 3 or 4 times to kind of push through and break out of a trend line to the upside. You couldn't do it. And in typical fashion, the wheat is quick to take away the gains, and they took it all away and then some on Friday. So, we'll see if it can't hold those recent lows from 2 weeks back, which we're getting very close to. It could open the door up for some further downside, but given that, I don't know that you did a lot of damage, but it's sure, kind of confusing to see the wheat market doing what it did this week.
Is the market also kind of tired of trading the export news or the Ukrainian news?
I think there's some of that, and there's still that Ukraine is going to be allowed to maybe export some old crop grain stocks here, and now they're into their harvest as well. That story doesn't seem to be going away, and
right.
I would have thought it was a non-starter, but sometimes on a story like that that doesn't go away, maybe there's a little more legitimacy to that. So that's something I'm a little bit fearful of, and I think maybe the wheat market's fearful of that as well.
So how much of the soybean market's problem on Friday was lower soybean oil, which was following the lower crude oil?
It was, and about the only thing that bucked the trend higher was the soy meal market. That was just, a lot of the spreading activity. The soy oil market has led us higher really for the last 18 months. It's been a large part of the bull move in soybeans. Crude oil just giving up the ghost on Friday, just really getting beat up in a pretty ugly close. If they can't recover that market quickly, I'm talking the crude oil market here into next week, I think it opens the door up for a much deeper break. And that's probably going to continue to weigh on soy oil and beans to a lesser extent. But I think beans are just, it's hard to create a weather market in beans in late June, even the first week or 10 days of July. It's more of an August, month as far as the production cycle goes. So beans have kind of taken a back seat, and they're just kind of flopping around here, waiting on a little more direction from the energy markets. And then they're not going to divorce themselves entirely from corn either. If corn's going to have a leg higher, it'll help support the bean market too.
Yeah, and tug of war between meal being up and oil being down, but a lot of that's just spread unwinding, isn't it?
I think it's entirely spread unwinding. That oil meal spread is volatile, and it's been a huge volume trade here for the better part of 18 months. And there's a lot of that a lot of volume in there, long soy oil and short soy meal. So if we're going into a bigger correction to the downside in soy oil, based on weakness in the energy markets, then soy meal in the short run's got some room to run.
Absolutely. So let's move over to cattle. We had a lot of bullish factors this week. Hot weather, death losses, higher cash trade, but we couldn't take out last week's highs. What's it going to take?
Well, I think it's going to take some stability in the financial markets, the stock market in particular. Even there's not a one-to-one correlation, but the cattle market watches what the stock market does with the I guess implied understanding that as the stock market goes, so goes the economy. And obviously with inflation and stock market losses over the last couple of months in here, there's some concern about demand longer term. And I think that's a real concern. But like you said, we've got some bullish fundamentals starting to happen. All this heat, there's been some death loss for sure. The numbers have shrank. I think we're maybe finally getting towards the end of this, heifer and cow slaughter that we've seen here for the better part of 2 years. So I think there are some bullish things happening, but right now the main thing is I think if we could stabilize the financial markets or even have a little bit of a corrective bounce higher in the equities, I think that'd take a little pressure off the cattle market as well.
Yeah, absolutely. I agree. What about the hog market? So the index has been back rising. We had cutout values which were higher, but that market hasn't even done a 50% retracement. So how much do we retrace, do you think?
Yeah, that's a tough. I think the corn market is going to be a driver here. I think some of it depends on how high the corn market goes the next 2 to 4 weeks. But again, like you said, we had that huge run higher early on. It was kind of unseasonal or counter seasonal to what you normally would see. I'm a little bit concerned longer term. You're still talking about $108 and $110 hogs here, and so we're at a pretty lofty level, and we're kind of about the time, or maybe just past the time where we normally see that seasonal peak. So you got to be a little bit cautious in here. If we can't continue to rally this market and it shows some weakness, especially if it gets under the trend line drawn off the two most recent lows from the last couple of months here, things don't bode very well. With all that being said, I think there could be some upside here, but I think we just have to be really cautious that we're kind of on a ticking clock as far as the seasonal upswing potential goes.
Well, thanks so much for joining us, Chip Nellinger, Blue Reef Agri-Marketing, markets here on AgWeb.